not exactly sure how long these lockdowns in China are going to be for, and therefore don't know how long it's going to impact the supply chain. What else are you looking at that's beyond the Fed's control that you think could really help or hurt inflation the most?
Well, the tragedy of the Russian invasion of Ukraine and the profound implications really for European security, and then the near-term impact on commodities prices are yet another one of the winds of the perfect storm that helps to inflame the inflation problem that we're facing. That war, not so long ago, there was some hope that there might be credible ceasefire talks, and that hope has been completely dashed. It appears that Putin, who clearly is directing this war, is committed to keep fighting. The Ukrainians are committed to keep defending themselves, and that creates further inflationary problems, at least in the very near term. I think that the markets are focused primarily on the commodity impact of the Ukrainian war. But I do think longer term, there's profound implications in terms of how how much the West has to spend on its security. But in the very near term, I think the war is probably another pro-inflationary factor to consider out there. And it's one that's more likely than not going to persist for quite some time.
And Sarah, going off of that, I guess how big of a headwind, how big of a challenge do you see this being to U.S.'s economic growth here, at least in the short term?
So I think we're already beginning to see it in terms of real household income. So I mentioned balance sheets are starting off in a very strong position, but given the inflation that we're seeing, the fact that we no longer have the fiscal support that we did for the first year and a half of the pandemic, is we're getting to a more precarious position for consumers. So in some ways, the consumer position, it's only going to get weaker from here. And so I think that does bring some headwinds to growth, and is why we do expect growth to slow over the next over the remainder of this year and on into 2023 is there is that inflationary risk where households income just does not stretch as far, and that's going to weigh on your overall demand, and in many cases the global backdrop is even weaker, and so that's going to create a problem for businesses and exports as well.
You talked about being perfectly boring, RJ. What do you want to hear from the Fed chair in just about 20 minutes?
The first thing I think we want to hear is they have strong conviction to continue fighting inflation. As bond investors, we've been investing now for well over a decade in a disinflationary world, driving real and nominal yields to very low levels. After the pandemic hit, the Fed drove rates to zero, massively expanded their balance sheet, pretty much set the tone for what we're experiencing today. We knew that inflation would become somewhat of a challenge. I think the Fed also did as well. It's proven to be much higher than the Fed forecasted or just about anybody else. So at this point, as a bond investor, with the Bloomberg Aggregate Index, conventionally used index of investment grade fixed income securities down almost 10% on a year-to-date basis, we've sustained our lumps. The bond market is pricing in a hawkish Fed for good reason. The highest inflation in decades needs to be resisted by the policymakers. So we want to hear Powell have that conviction yet again when he goes to the podium. To be honest, I think he and his colleagues on the FOMC have displayed that conviction pretty consistently. There don't seem to be any doves left. So the big surprise would be if Powell gets up to the podium and is in fact somehow dovish in tone. I think it's highly unlikely.
All right, guys. So the Fed is going to have a meeting. We're going to see what they're going to do to the market. I just wanted to give a quick update on what's going on. So we could definitely make a move. A lot of people are saying, man, it's bullish. The market is taking off. But I think so too. I definitely think that we're going to be in for the market to pump up. So the Fed going to have their meeting in about 20 minutes. We're going to see what is this going to do to the crypto and stock market. But I'm going to check back with you guys once the Fed meeting starts. It's about 20 minutes. I thought it was starting now. And we gonna see what they say and see if we should jump in and make a play. Let's get it.